Good morning, everybody. Just trying to get my computer organized here. Had some computer issues lately, and hopefully I'm at the end of that road there. But anyways, today is Friday, May 8th, and welcome to the QOL Trading pre-market analysis. So let's go over economic data, what we have to finish out the week today. We have non-farm unemployment change, 115,000, expected 65,000. I'm going to say that's going to have an initial positive impact. Unemployment rate 4.3% came in line. We have consumer sentiment at 9 o'clock. I don't care about it personally. I think it's politically driven right now, so I don't really pay much attention to it. The numbers don't jive. 11 o'clock, you've got Trump speaking. They just stuck that in there. So I'd be careful today. Everybody's aware that there was some shots fired in Hormuz yesterday, so we have to watch the data that's coming online there. So let's get right, before we get into things, I want to do housekeeping things right now. So if you haven't already, come to QOL Trading and join. We want you to join the paste that in there. We want you to join the email list so you can get on and get the newsletter every Sunday. We have put out about 7 editions so far. Pretty much goes over the week in review and what to expect for the following week. I put the link in the chat there so you can get there. It's QOLtrading.com. Up at the top here, if you click on the Discord, you can join our Discord community. And then everything on that channel, except for the trade room, is free. And I'll go over what you'll get there. But once you're in the Discord channel and you want to upgrade, you can go to I'll show you how to upgrade into the trading desk so you can do live trading from 9:30 a.m. to 11 a.m. Eastern time. So if you come to the channel here, you click the Discord. And if you want to learn more about our program, we have mentoring services here. Just click on the Learn Our Strategy. And if you click on that, it should bring you to a screen where you can set up a call here. 15-30 minutes with me. I can find out where you're at in your trading journey, and then we can go from there. So anyways, when you do hit the link and you join Discord, it will take you here. This is the free channel here. In the channel here in the pre-market, post-market analysis, I always post every morning where a link for where we are right now for the pre-market analysis. So you pretty much click on that and that'll bring you into this room that we're at right now for YouTube. And then we have a levels channel. This is free. If you want me to go over any levels, you just write down the stock in there and put a request in there and I'll get to it and I'll give you the levels of, this is all my interpretation. You have to do your own homework, of course. It's all educational. So I'm not a financial advisor by any means, even though I've been doing this for 30 plus years. Still have to be careful with people coming back and saying, hey, you told me to do this. So we don't want to get into that rabbit hole there. So if you've been in the room for a while and you want to upgrade and you want to come into the live trading room from 9:30 a.m. to 11 a.m., you just click right here, Get Trade Access, okay? And then if you click on the link right here, once you click on the link, it will bring you to this page right here. And of course, if you initially join, you join for free. And then if you want to upgrade, you join for $39.99. And that is the live trading room Monday through Friday, 9:30 a.m. to 11 a.m. And it is a good bang for your buck versus compared to what we do on the one-on-one mentoring program. So anyways, let's get into our levels and then we can get on with our weekend here. So let's start out with what we normally do, and what we are starting with is the VIX. So the VIX right now, tried to bounce back yesterday morning, but we're still at good levels here. We're below the 20, below the 200-day moving average here. $18.21, 1821 to 1835, below those moving averages, which is great. However, we still have some open point of control levels that are much higher than us, or excuse me, not point of control levels. We have some gap down from April 8th, 25.74 is the first gap down, and the second one is from $30.24, 34 cents rather, from March 30th. So if the VIX starts elevating here, you're going to see the stocks pull back. But it's really quite amazing right now with this vicious, tenacious rally that we've been experiencing right now. It's something that's, I would say that most people are saying they've never experienced. So getting to oil, here's the Brent crude right now. It's hovering at $100 in between the 50-day and the 20-day moving average price per barrel. 20 is at 20-day moving average is 102.98 per barrel. And then the 50-day just kind of hanging right at it at $100. So you'd like to see it pop, drop below that, and then maybe we could get below the 96 level that we had yesterday. You get below there, maybe you could start, pulling back to this 100-day moving average at 82.76, and then the 200 down at 74.15. That would be pretty nice. It'd be good for our pocketbooks. Even though that is Brent crude, this is the WTI crude. Or the United States here. So same thing, caught in between the moving averages. 50 is sitting at roughly, call it about $84, $94 a barrel. And then the 20-day moving average is sitting right at about $96 a barrel. So let's see us drop below the 50-day moving average on that. And then we can get back down here to the 100-day moving average at 72 dollars per barrel. And then if you can pierce that, then you get down to the $69.76 a barrel. And that would really bring down the gas prices for us significantly. I don't know if you've been filling up lately, but it's getting pretty expensive out there. So let's get into the ES right now. I'm going to try to fly through these levels right now. These levels haven't changed. We are in uncharted territory again. 74.1250 is a pre-market high right now. I've got this 161.8% Fibonacci extension at 74.65, 74.8570. I don't have anything above that, so can't give you levels from anything that we have not seen before. However, in the pullback, ideally, I'd like to see a pullback down to the 71.8579. That would be a decent pullback. It actually aligns right with the 20-day moving average, 71.8403. If you lost that level, we still have some open point of controls. One at 70.6945, and then the other one at 70.3476. I believe there's one more below that, and it's right in line with all these with the 100 and the 50-day moving average. So that's a pretty decent pullback. If you get that 68.7394, that would be your ideal pullback for your longs there. As far as the upside right now, I think you're just looking for pullback longs right now, and when the market starts falling, people are going to start panicking hard if you start losing some levels. So that's when the true trader comes out. So let's get into the SPY. SPY is going to be very similar right now, right? SPY, we have an open gap down here. I would say come down here to 725.15. If you get that pullback, that'd be a good level for a pullback long here. We have this 20-day is sitting at 710. I don't mind that, but I think an ideal pullback is if you actually lose the 20, you pull back down into the 702.78 or maybe even the 697.44, 697.84. I like that level if you pull back and down below this open gap that we have here. So let's get into the SPY. And actually, one thing I want to talk about I thought I had something up here on the high side. I don't. Yeah, we'll see what happens today in order to get us some higher levels. But right now, just got to respect this unbelievable rally here, people. This is crazy. So, you're right. If you look at this back here, you want to break and retest to some levels where there was a lot of trading activity. And this right here, this level that I have here, 697.84. If we get that pullback, you could see right here, this is where the action was, right? So that's going to be an ideal pullback if you get that. If you lose it, you've got a 691 level down there. So, you're just going to have to be patient. I'm sure there's still a lot of money on the sidelines right now that's eventually at some point going to chase it. So actually, here it is. So this is the next level that I possibly have up top here. It's 804.47. And you would get some resistance at the 800. It's a psychological level if you do pop all the way up there first. But I would be shocked if it gets all the way up there without any kind of significant pullback, but who knows? Nobody's been able to call this rally since the beginning of April, right? Look at that. Crazy. Anyways, let's get into the NASDAQ here. Try to move along here quickly. Same thing on the NASDAQ. NASDAQ right now, your ideal pullback of what I like. If you really got it, I mean, you still have this open point of control down here at 25,310. Do we, something really earth-shattering is going to have to happen for that. To me, to get that kind of pullback, I think something's going to happen something will probably happen over the weekend when we'll open up a lot lower to hit those levels. It just, unless something really crazy, earth-shattering happens out there with newsworthy, I don't think you're going to get a vicious pullback. That's the only thing that's going to push that. I would say we're probably going to get a pullback once they confirm the new Fed chair. I think he comes into play. I think he's got a different psychology when it comes to interest rates, and I think that there's a good chance he comes in there, and I think the market has its pullback. And I think it could be severe when he comes in. So I think that's going to be the catalyst to bring the markets down. So right now, I think enjoy it. However, we are on a Friday right now, so maybe people are going to be taking some risk off going into the weekend. But who could really tell right now? People have been saying that for the last month, right? Oh, there's got to be a pullback, and there hasn't been. So let's get into the Qs. Qs right now, same thing. I would say an ideal pullback on the Qs. Same, this open point of control at 614.31. That's your really ideal money pullback long there. We are at an upper regressional trend line that I have here from the beginning of April, or actually from April of 2025. Probably get some resistance right there. And if you do pop through there, I don't have another level on the upside here until 747. That's what I have on the upside. As far as the pullbacks here, this 127% Fibonacci extension would be a nice pullback level, your first one right there. I do have this level here, and I think this is a pretty good level here. I like this level here of 660, 664. Here's the high. We came off that high really hard, right? So sellers were there, and then we popped through it, and then you see how we held it right there. So I like this level as well. That's 666, 64 if we get there. But right now, pre-market pushing pretty hard. So, you just can't get in front of a moving train, whether it's going up or down. Obviously, it comes down harder than it goes up, but this is a crazy, crazy, tenacious rally here, people. This is something you have never seen before from March 30th to right now without any kind of significant pullback. Get a little tiny pullback in here on April 27th, and then that was tiny compared to this. So probably get some other, tiny pullbacks. 674.49, you can see right here it comes in. But, the ideal pullback is right down here, people. This is where you're going to get, double top, broke through it, and now you want that break and retest to come right back down into it. So this, I would say 637.01, pretty good level right here. Let me just get down here 15 minutes. This is a good level right here. So you lose a 20 if it gets down to that level, but still, I think that's the market needs that. We need a significant pullback. It's not healthy for the market to continue to go up like it does right now without any kind of pullbacks. You need some new dry powder to come into the marketplace right now. And who wants to put money in right here at all-time highs? Well, the funny thing is, all-time highs right now may not be all-time highs, 5-10 years from now, right? You're going to be looking back saying, "Oh wow, look if I put money in back then." So very difficult to start investing money when we're at all-time highs and unapproachable, uncharted levels right now. So let's get over to Tesla. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, go down on the link below and join our Discord community. And then you will also have access if you upgrade to our live trading room from 9:30 a.m. to 11 a.m. Eastern time. Tesla, I would say if we can get above this 418.34, I'm just going to talk about the upside first. If we can get above this 418.34, I'd like us, the next level I'd like us to push into is 431. So let's just take a look back here and show you what I'm looking at here. Let's go 90 days on this. See if we can hone in on it. Let's go 30 minutes, see if that's better for us. 90. So mark this 418.34 level, and as we come over here, we can see there's not much here stopping us to get up to that 431 level if we can get through this 418. I don't see it. I mean, maybe 422. You get a high here on, what is this date here? 2/13/26. I can mark that. This is a decent level here. So I would say, let's see if I marked that correctly. I did. It is 424.06. Yep. So where we're at right now, that would be your first line in the sand. If you get up above 418.34, you get to this 424.06, and then I don't have another level until 431.5. This is a 30-minute chart we're looking at, by the way. Let's take a look at beautiful pullback yesterday, the 200-day moving average. So everybody saw that, right? You rejected it, pretty much rejected it here on the 6th, and then you popped above it, and boom, you held it nicely, right? So rejection, break, retest. Probably could retest it again. This 418.34 price level right now is probably your line in the sand to go higher today. I would not mind a pullback into the 100-day moving average, probably below it. So you're above the 200, now you're above the 100, right? So pretty extended. This is all bullish, people. So even though we do have these open point controls down below here at 333.97, that's still open down there. Right now we are bullish. That's all there is to it. You know, let's take a look at what's happening here. Does it mean that Tesla can continue to go straight up? Well, you know, look at this. Look at this beautiful pattern we have here. This 100-day chart. I don't mind this move right now, so maybe a pullback into this 409.83 today. If you did get some kind of vicious pullback, that may not be bad. Let me just mark that too. And that is April 17th. So now when the market's bullish, now what we're looking for is we're looking for the red lines. And my red lines represent highs of the moves. My green lines represent the lows. So now as you're pushing higher, you're looking for levels for pullback, right? So this is a break of a high and then coming back down to it. Whether it's a weekly high, a daily high, a monthly high, it's still a high. And then when you break through it, so like for example, we could draw a line here, which is automatically plotted. This is yesterday's high. You could use that for the first level. To me, it's a little close, right? I'd like to see a little more steam pulling me back into a certain level. And these levels are probably, you know, even though I have them on here right now, I'm not sure how much, how much weight I'm going to actually put into those levels. We'll see how the market responds to them. You know, you're just going to have to wait and watch, you know, and see the price action, you know, because right now, you know, we're moving higher, right? But I've gone over this before, people. Look down here. This is where you pay attention, not the animation candles down here where the volume is, right? This is where you could see that there's good volume. You could see this big purge yesterday, last 15 minutes of the hour of the trading day yesterday. Huge purge. It's about 4 million shares traded. And now look at us today, right? So somebody knew something right there, and they took advantage of it, right? They took advantage of pullback right into this 200-day moving average. Boom, popped into the 100-day, and now we're above it. So yesterday we tried to, you know, we broke above it in the morning, tried to hold above it, lost it, and then once we lost it, we came back in. There was a break and retest, a beautiful continuation on the downside. But now today, same thing, got above it, lost it, and now we're above it. Still trying to hold it a little bit though. So I don't really love this 100-day. But that could be a level, could be a target. If you lose certain levels, you come down here. This is a close from yesterday, so that'll be a target. So, you know, when you're trading, when you're above the previous day close, it's bullish. So you're looking for maybe the market to gravitate and pull back into that previous day close and take a long. However, if it really steamrolls through it, then your thesis on the pullback longs from the previous day close are going to be over. So you got to watch that. So ideally, to me, this is a great level of pullback here. If we can pull back all the way to this 402.12, to me, that's a great pullback. Why? Look at this. You have a double top high and you broke right through it. You came right down, popped above it, right? And it's a typical break and retest level that you love, right? Here was another one, another high. You broke through it. I like this level. This is a pretty good level too, actually. So you have two really good, strong levels here on pullbacks. This 397 was a fantastic level here. I like this level. Once we got through it, I knew we were going to continue to go on the upside here. The one thing that's sticking out to me that's really bothering me is this damn point of control that we have down here from 333.97 from September of last year. Now, mind you, we talk about all the rest of the point of controls too. I don't know why I don't have them marked on here on this one, but 455.12, that's point of control above us. We're definitely heading in that direction right now. And then above that, the last open point of control we have is 478.39. Ideally, it would have been great to fill this 333 level here. This one I got marked on as 334.07 level, so we can get rid of, don't have that looking over our shoulder like, oh, we still have an open point of control down below for the markets to, to pull back, right? So got to be careful. We are at some decent levels here. However, that 418 level that we're talking about right now, that's going to be your line in the sand today. If you get above that 418.34 level, then you push into the next level I have is 424.06, and then above that the 431.50 level. So that's it on the upside right there too. And then you have all these supports down here. If right now you got a couple lines of support here. You got the previous day close that's just above yesterday, the 100-day moving average of 410.70. If you lose the 100-day moving average, I think you're going to probably plow through these highs also and work your way back down to the 200. And if you lose the 200, then I think this rally is going to be over for the time being. So anyways, that's going to be it for the levels on Tesla. Let's go over what we're going to do for today. I'm going to start today off with today's expiration, the 415 calls and the 410 puts. So you can see where we're at right now. It's kind of right at it. This premium will be a little higher, probably in the $4 range. And then this premium will be lower, probably in the low, I would say mid to high twos, maybe in the threes, right? So the one thing I want to also go over is, let's go over, which I forgot to talk about, was the this new trading indicator that I've been playing with, and it's been really, really fantastic. I got to tell you, in the trade room, we've been going over it. So just so you can see this, and we'll try to expand this the best we can so you can get a good view of it. You know what? Let me just do one thing here to make it better here. Let me just get rid of this. Apply. There we go. Okay, so this new indicator that I've coded and played with right now, it pretty much, these dotted lines here, this green line here is the high of the 5-minute opening range, and this red dotted is the low. And it's giving you, when breakout, this arrow, which you can see right here. Let's see if I can make that a little bigger. This is better. So this green arrow right here, this populates the second it breaks, tells you to take your trade. It then tells you your price targets, right? It doesn't necessarily mean that, okay, well, it's going to go to that level. It tells you that what it means is, this is the first level, that's the second level. This tells you that if the market continues on this is where you should start shaving off of your position. It doesn't necessarily mean, oh, once we break, that's where it's going. It tells you that, okay, well, if let's say you take your small little profit, and then you have a runner, or whatever, however you play your trades, you shave off some right here, and then maybe keep the last one to this last blue dotted line right there. So now what happens is, now it gives you that signal to buy. All right, so we're still, we're still trying to buy here, and then at some point, right here, so you were still long here. It did not give a signal to exit the trade yet, so you were still in it. So, but not until right here at about 10 o'clock, it populated a it's an indicator that pops up here telling you to shave your position or exit the trade. And right here at 10 o'clock, it pierced down here with volume that indicated and told me to get out of the trade. And then this purple arrow is an early entry for the downside, right? So you enter the trade here. It's an early entry. It's not the break of the 5, right? So I've coded it to give me an early entry as well as the actual break. So then I enter the trade right here, and then this little yellow dot right here, it gives me the same exit the trade here, right? So you exit the trade here. So now this is choppiness, right? It doesn't mean you're taking the trade every single time. It's just giving you that indicator, right? So now it told you to exit the trade here, gives you an early entry thinking that it's going to go back and break there. And then right here it says, nope, this signal is no good anymore. Boom, get out of the trade. Here's your early entry again. And then that one worked out great, right? So now you've got the early entry. And if you take your early entry, your price target could be the pre-market high or the break, however you want to structure your trade. And then from here, the market went down. And then right here again, it gave you that signal to get out of your puts, right? And then what happens again? It gives you a signal again. Here's your early entry on the puts. And then boom, not until about 120 did it give you the hard signal of the break of the low of the range, right? So it broke, didn't quite get down to that first price target on the put side, but this is what the signals are telling me right now. And so you can see if you were still in this put right here at about 225, it was telling you get out of the trade. And boy, this signal was so accurate because look what happened here right before the close. 4 million shares came in here and just boom, knocked you out of the trade. So if you were swing trading, it was a fantastic. If you were swing trading, you're thanking God that we have this signal told us to get out of this trade, right? So we're going to continue to monitor this. We're still trying to figure out, what the good trades are. We don't want to be caught in this kind of stuff. This is a choppiness, right? Okay, we're going lower. Oh no, we're going higher. Oh no, we're going lower. That's where you're going to get chopped up and you're going to lose your money. So you're going to have to use your levels. So like right here, when you push down through here and you lost this by the way, this gray area right here is the midline of the 5-minute opening range trade. So you can base a trade off of that. If you're below the mid range, take a short. If you're above it, take a long. Right. So there's thousands of ways you can have a trade book and have a strategy off of this indicator that we have here. So anyways, come on down, join the Discord community, join our trading room. It's a small little price, small little fee, and we go over all of these. We go over all of these trades. We go over live trading, of which I show my screen, and the screen that I show is this screen. This is what you're going to see in the live trading room. So come on in there, small little tiny fee. If you like what you see in the trading room, we have one-on-one sessions that we spend time with our students, once, anywhere from 1 to 3 times per week. And we also offer group sessions up to 5 people. So that's going to be about it for today. So again, if you're new to the channel, subscribe to the channel. I don't mind if you share these videos with people as well. Hit that thumbs up button, like this video, and then come on down and join our Discord community. Whether you want to join the trade room or not, at least join the trading community. It's free. And then don't forget to go to the website to put in your name and email address so you can get a weekly copy on Sundays of the newsletter. And this Sunday will be the 8th edition. So anyways, if I don't see everybody, have a great weekend, and I will see you on Monday. And actually, I may pop out a couple videos on over the weekend as well. So thanks for coming. Have a great weekend, everybody. Small lot size. Don't ruin your weekend. Talk to you later. Bye.